morning, I'm James Gruber and welcome to the Morning Report for Wednesday the 29th of July. Markets overnight had a lot of news to digest. There were continuing earnings results out of the US, but the big ones are due tomorrow US time and Thursday from the likes of Microsoft, Meta, Apple and Amazon. There's also the Federal Reserve meeting tomorrow to decide on interest rates. Investors expect them to remain steady, but there have been increasing bets on a possible hike. And then there's the Iran war and the continuing negotiations to get a peace deal back on track. So what was the market's verdict on all this? Well, stocks mostly rose in the US, though chip makers continue to fall, and they're now in a technical bear market, being down more than 20% from recent highs. Meanwhile, US bonds lifted and oil tumbled again on those peace deal hopes. Let's take a deeper look at what's happened with Aussie futures, commodities and currencies. The Australian share market is heading for a higher open, with index futures up 0.8%. As for the ASX 200 yesterday, it fell 0.3% to 8,865, as lower commodity prices weighed on mining stocks and financials declined. Today, miners and oil companies may have a tough day, given further drops in commodity prices overnight, though investors will await the Consumer Price Index print due out later this morning. Okay, let's turn to commodity markets now. The global oil prices fell to a two-week low on cautious hopes for a resolution to the Iran war as traders assess developments in the Middle East. Brent crude futures settled down 4.8% to just above $84 a barrel. Base metal prices were lower due to a relatively strong US dollar. Copper futures fell 0.3%, while aluminium futures lost 1.4%. Gold futures fell to their lowest in a week, weighed by a firm dollar. While investors awaited the interest rate decision by the US Federal Reserve, the futures settled almost 1% lower at $4,038 an ounce. Meantime, iron ore futures edged down as steel mills in top consumer China remained shut for maintenance after receiving production restriction notices, although a pullback in global shipments limited losses. The futures settled down 0.1% at $98.30 a tonne. Let's now take a look at currencies. The Aussie dollar was last trading a little lower at 69.75 US cents. Going back to Wall Street now and how other world markets did as well. The Dow Jones index finished up 1%, the S&P 500 gained 0.2% and the Nasdaq lost 0.2%. US share markets were mixed as gains in Boeing and Coca-Cola helped offset tumbling chip stocks ahead of quarterly results from mega-cap tech companies this week. The healthcare sector led sector gains up 2.3%, while declining chip makers kept the tech index down 1.2%. Microsoft rose 1.1% ahead of its report on Wednesday US time, while Amazon lost 0.2% ahead of its results on Thursday. Chip makers that have benefited from heavy AI spending added to recent losses, with the Philadelphia chip index losing 4.5%. It's fallen over 20% from its record high close on June 22nd, but is still up 56% year to date. Apple rose over 1%, lifting its stock market value to $5 trillion for the first time. Coca-Cola rallied 5% after the beverage company raised its annual revenue and profit forecasts. Meanwhile, Boeing jumped almost 5% after the airplane maker generated positive free cash flow as its turnaround plans gained momentum. Corning tumbled 12% after third quarter sales forecasts missed estimates, while contract research firm IQVIA Holdings jumped 14% after lifting its annual profit forecast. US government bond yields dropped ahead of the Federal Reserve's latest interest rate decision on Wednesday US time. The US 10-year Treasury yield fell 4 points to 4.61%, while the US 2-year Treasury yield dipped 4 points to 4.28%. Moving to the European markets now, the continent-wide FTSE Euro First 300 index ended 0.3% higher, while the UK FTSE 100 rose 0.8%. European share markets rose for a third straight session on Tuesday, European time, as strong results from Unilever helped lift consumer-focused stocks higher and offset weakness elsewhere as earnings season picked up pace. Unilever jumped 8%, logging its biggest one-day gain in 4 years, after the consumer goods group beat second quarter sales growth estimates. Mercedes-Benz added almost 3%, after the German automaker reported a 22% rise in quarterly operating profit. Luxury stocks got a boost after LVMH reported a 3% rise in quarterly sales. Though its shares were flat, the broader European luxury index edged up 1.5%. Meanwhile, Barclays lost almost 5% despite reporting a 17% rise in first half profit that beat forecasts, as analysts said its equities performance undershot market expectations. So let's take a look at what's on the watch list. In Australia, the Consumer Price Index for June, both for the month and quarter, will be released this morning. CBA economists are forecasting the headline rate will remain at 4.0%, while trimmed mean inflation will lift to 3.7% from 3.6%. It's also the unofficial start to the earnings season here, with Rio Tinto reporting its half-yearly results today. There are also quarterly updates from Atlas Arteria, Liontown, Mineral Resources, Northern Star, Woodside Energy and Nickel Industries. In the US, the Federal Reserve will meet on interest rates and is expected to keep the target rate at 3.50 to 3.75%. And earnings season there continues too, with Microsoft, Meta, Starbucks, General Dynamics, CBRE, Etsy and Procter & Gamble scheduled today. And that's it for today. For further developments on the local trading session, please tune into the CommSec Market Update podcast this afternoon and, of course, the Market Close video. Have a great day.